Stocks are up, man. Stocks are really flying here recently, but that's not all that's flying. And I gotta say, today is a little bit of a celebration day. I got another winner here, another real good winner going on gold. And it's running hot. It's running real hot. Up another 1% today. Gold on my third entry point is now very well in profit. We've got 3 trades all running red hot on gold. I entered for the first time early May. I added a second time on this pullback over here a couple days back, well, several days back now. And I added a third trade yesterday. This is going to be a very profitable trade. At this point, I'm going to be trailing stops further in. I would like to trail my stop loss. I'm going to trail my stop loss just below this market structure low. We are floating at the time of us hanging out here on the live stream. We're up just shy of $12,000 on this position. Now, when I say I added a third trade, you can see that my total quantity here, I have 2,000 shares of GLD, which is an ETF that tracks the price of gold. So we're sitting here with just shy of 12 grand, which is a really good trade. But let me not miss something key here. You guys have also seen me take a couple losses this week. I was wrong on an oil short. I was wrong on my Bitcoin short. And I capped my upside a little bit too soon on the indices. That being said, we are hitting equity highs. And we gotta say it, guys. You guys know when you get these big green candles,
perfect
yep,
candle.
That's right. Guys, Frank is in Italy. Can I show you guys this? I gotta show you. We got an updated picture from Frank, so give me just a second here. Actually, if you're somebody who's in our Telegram channel, you probably have already seen this. Julie dropped a picture from Frank, a little bit of an update. So let me show you guys because you need to see this. I mean, Frank is living his best life. You guys ready for this? Here's Frank. My man Frank is sitting, you can't see this very well, but my man Frank is on vacation, pulling up charts with the mother effing Coliseum behind him. I think that's the Coliseum. I could be wrong. He's on vacation in Italy. Look at this. Let's do a dissection of what we're seeing here. Frank's got the laptop open, got charts, trading view, and options pulled open. You can't see it very here. He's got the options chain, and he's looking at like an options trade. S&P 500 again, 930 just opened. Stock market is open, so indices probably going to make some moves here one way or the other as we digest what has been, you know, kind of a victory lap for the bulls. The S&P, the NASDAQ, they're up a lot, and it's for arguably a very good reason. It's kind of a grand slam hit for the bulls. Let me explain. We have inflation normalizing to a degree. You have earnings, stellar, really good earnings, especially from the names that count. Technology, big, solid, perfect candle, earnings,
candle,
right?
Candle.
Perfect candle on earnings. You also have, again, growth is like very modestly slowing. We're not crashing by any means. And now what? Now what do we have? Well, you've kind of got the green light on stocks, but here's the thing about stocks. Here's the thing about trading indices. By the time all the lights are turned green, the market's already up, okay? So let me tell you something. This is why trading is so hard. You guys want to know the real reason why trading and investing is so dang difficult? The reason is because the market is smart as SHIT. It's so smart. That's why it's hard to make money. It's not emotions. It's not psychology. Yes, those things are hard to work on. The market is smart. That's why it's hard. It's hard to beat the market. It's hard to make money in the market because brilliant people are pricing it every day. I take this as a point to make often. I take this opportunity often because a lot of traders, they convince themselves that, oh, direction is pretty easy to get right. It's just my psychology that's messing me up. I could not scream no louder on that front, because the market is wicked smart. That's why it's hard to trade and make money in it. The market is right most of the time. That's why it's hard. Take that with you. After my years of trading and investing and studying this stuff hours and hours a day, I can tell you, if you get into fundamentals, the market is wicked smart. That's why it's hard to make money, point blank period. That's the strong case. I will stand on that forever. The market is smart. That's why it's hard to make money in it. It's not irrational all the time. Sure, there are periods where things get a little overdone, but this stock market rally makes a lot of sense to me. But you know what also made a lot of sense to me? Gold longs. I'm 3 entries in on this gold campaign.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I've taken every opportunity to add to my position. Gold currently makes up, let me give you some stats here. Gold currently makes up, let's call it half of my portfolio. So I have a stock brokerage that I trade ETFs in. Gold makes a record-breaking size in my portfolio right now. It is half of my entire account. Now, I'm not leveraged, so please understand I'm not saying that I'm over leveraged and all in gold. What I'm telling you is that on a not leveraged position, a cash position, right? I own shares of stock. My exposure is very heavy to gold. But why not stocks, Nick? Why not stocks? Well, it is also heavy in stocks. The other half is very heavy in stocks. So I'm having a really, really good 2024. And I say that modestly
Somebody
because,
tell us, how much is that in USD?
there are other times in past years where I've had terrible years. 2022, I posted a video sitting in my Jeep, just so straight up with you guys, telling you, and some people might remember this video, I wasn't crying, but I was on the verge. And I'm just kidding. But I remember it was like hard to come into work some days because I was losing so much money in the sell-off. I was so wrong about companies that I liked, and I was trying to go long on certain things and trying to trade gold, and nothing was working in 2022. 2023 was my best trading year ever, and 2024 is starting out really, really good as well. So we'll see where it goes from here, but I just want to give you some context. My positioning is not always correct. I mentioned this earlier. I lost several trades this week, but it doesn't even matter. This is the cool thing about adding to winners and not to losers. I've added to this winning position 3 times now, twice in the last week. And even though I've had losers as well this week, it doesn't even matter because the winners are just rapidly outpacing the losses. Yeah, we're ringing into the register. It's a good day. I gotta take my good days when I can get them, guys, because it's not nothing is a straight line in trading. I'm fully aware that my win streak will not last forever, and there will probably be, in the months ahead, times where I'm coming on camera talking about how I can't get anything right. So I'm just telling you, full transparency, right now things are great. I'm not always right.
99% of all my trades are 100% profit.
That's a blast from the past. Some of you guys might remember that. And markets are up, Kenzo. I mean, they are flying high. The NASDAQ, the S&P, and the Dow just shy of 40,000. Markets are cheering. And do you think they have a right to be so excited?
Yes, I think on Thursday, Thursday or Wednesday, when we received CPI and retail sales, they were not actually as hot as we were expecting. and that is actually a good news for the market, and that at least it gives the market to actually push against the dollar, as the dollar is currently losing the momentum. But the reason behind that is Fed might start to cut the rates, because at least we see something CPI at least going a little bit lower, even if it was not really that crazy low, but the numbers were not actually going up.
Sure. And, the thing is with it, Kenzo, is the next conversation I think that we're going to have is how much this economy now is actually slowing, or is it just very healthy and cooling down a bit? I made this point yesterday in one of my videos. I discussed the idea that everything is kind of behind us now. We have seen a lot of inflation data that came out good. The economy has
Yes.
shown some signs of normalizing, cooling down. For the first time in a while, we're seeing pretty across the board
Yes.
jobs data come down, cool off a little bit. You're seeing retail sales number come down. PMIs are down. So, for now, the market seems to be cheering the idea that
Yes.
bad news is actually good news, right? They're saying, hey, well, that's fine as long as it doesn't keep slowing, because it means that the Fed can cut rates. But I
Yes.
also think that maybe there's a case for, and I am still very bullish overall, but now that everything is behind us, is there a chance we just see normal pullbacks in the price action now that there's not really anything seriously exciting to look forward to, barring NVIDIA's earnings report after the bell, May 22nd?
Yes, beside actually technical, or let's say in technical, beside fundamental, when the market is going up like that, it's also a good time for people to take their share. If maybe you're buying some shares, or you own some shares from different companies, one way or another, the market just reaching the record high, why not? You have to cut
Sure.
your profits. So actually, you have to balance your portfolio, and you have to cut where you're making some profits and buy where maybe it's still affordable to do so. So on Nvidia, mostly maybe you will see when we expect like earnings, especially next week. Obviously, there are people who already bought the stock like few months ago. So now they're just waiting for a smaller move. Then they will be taking everything out. And once it's down again, I think they're going to jump on the market again. And mostly it happens with tech stocks. When they release the earnings, the market doesn't really just jump immediately. The market starts by selling. Then a few days later, the market starts to catch up with maybe the estimation might be good or bad, but still the market will be going down, because it might be at the highest areas where people think that, oh, this is a good profit, let's take out something, and we might see some sales. Later on, the market still reverse and still fly.
Sure. And, Kenzo, you've got the dollar index pulled up here. I want to ask you about that. So the dollar
Yes.
index, for me, looks just really in a rough spot. Now you've got not only the economic data showing signs of cooling, as I mentioned previously,
Yes.
we've been talking about over and over on the show, but you've also got the inflation story, which was the big kind of bullish catalyst for the dollar was, well, inflation's going to stay higher for longer because growth is still good in the US when compared to other places. And it still might be, there's no question that the US growth has been more impressive than other places if you looked over the last 12 months. But with
Yes.
now you're losing that story, the inflation, cool down, the economic data coming in soft. Is the dollar just due for a bit of a downtrend from here? What are you thinking?
Yeah, I think CPI was actually what we were waiting for now, and that was good. I think it's obvious that there's enough chance that Powell, he will actually cut the rates. So from there, for me, I think the dollar is quite still stronger, even though we know that they're still gonna cut the rates, but it's quite stronger where it is. But from here, I'm expecting a nice downtrend. But maybe we might get a smaller retest. Maybe that will happen. As you can see, maybe we might see the market reaching this level before going down. So from there, it's just going to be a conclusion that it's time for us to look for those sales structures. But for now, we know that even though we're expecting the rates cuts, just know that at the moment, dollar is quite stronger. We had enough like employment change, which was positive, even though this month it was not really that aggressively positive. But we know that for the past 3 months, everything was just positive. So slowly, I think now everyone's just going to focus on the rates cuts. I think we no longer have that topics where we're gonna say, oh, the rates are higher. Yes, but they show a slowdown, which is good, and that I think is what they were waiting for. Then I think they're gonna cut.
Sure. Yeah. And speaking of rate cuts and markets that are, especially sensitive to it, gold is
Yes.
really excited about this. To me, Kenzo, this is, I've added 3 different times. I've been talking about this a lot. 3 different times to my gold bullish idea. Not everything that I've been calling out recently has been right. I've been bearish, or I was bearish on oil. I got in too early, so I got beat up on oil a little bit. I took a loss on shorting Bitcoin. And so, not everything that I've done is right recently, but what I have gotten really right is the gold trade. I've added 3 different times to this gold entry. And with the inflation data coming in soft and the economic prints coming in soft, I mentioned this earlier that the Edge Finder has pretty uniformly generated a bullish signal. In fact, today we have a near perfect score on the Edge Finder, which is just telling us that after looking at inflation data, PMI data, GDP, everything seems to be, for now, pointing towards a bullish story for gold.
So a couple of things, just talking about the indexes. So a lot of my trading the last couple of weeks were sitting right here. And I put on positions where, we had PPI data this week, we had CPI data this week. There's enough juice from the Mag 7, enough consensus that was positive on earnings, and enough kind of quiet talk post FOMC that I thought we could at least test the all-time highs unless the inflation data came in really, really nasty, and then we'd fill the Apple gap. So I was directionally neutral going into this play, but planning on volatility, and we got it. So I did take some nice profit this week on reaching the previous highs. I was very protective of those profits, probably earlier than I needed to be, but allowed me to take profit, redeploy, take profit again. And I did that on the SPY, the DIA, and the QQQ. Now, why are we showing all-time highs? Well, it's because of everything we just talked about. It's because inflation is getting better. This is your headline inflation versus your core, and notice the downtrend, right? So, I mean, the Fed is slowly but surely getting their kind of Goldilocks scenario of softening labor market. The consumer's cutting back on retail sales, the consumer's cutting back on spending a little bit, and inflation is in fact going down. At the same time, stock optimism is happening because right now we haven't explicitly said that we're going to cut, but obviously the market is anticipating the September-December rate cut this year. So it's like the higher for longer, the light at the end of the tunnel is visible. The markets are running with this. The market's always typically forward thinking 6 to 8 months. And we have right now the runway where, Nick, I'm pretty bullish going into like July and August. I do wonder what September to December looks like. Now, historically, yes, Q4 is usually really bullish, and even post-election, I would imagine that's going to still try to finish on a high note. Yep. But I wonder now this, and I said this on Monday, I was with you guys on Monday. I mean, my biggest concern moving forward is we're sitting here at all-time highs, and we have momentum disagreeing and all-time highs with overbought conditions and relative strength disagreeing. That's on the Qs, that's on the DIA, that's on the SPY, that's on everything for the major indexes. Now, that to me doesn't mean that we have a bear market, but there's a couple ways I see this playing out. I could see the markets being a little bit trickier with let's say another pullback here, and then another rally, and then another pullback and a rally. But the one thing we have been noticing is very low volatility. The VIX is down again, like 1250 or lower. What's the VIX at today? I think it's down again.
It's down.
It is sitting at 1236. I mean, yeah. So, I mean, and the IB ranks on the indexes are single digits. The VIX is really, really low. I don't think it's going to stay like that, but this doesn't mean we have to have some crazy dramatic event. It just means I think the market's going to at least shed a little bit of this all-time high, see if we can buy the dip and justify this. But what I'm looking at is I'm trying to put my my crystal ball cap on here for a second. How far out could I go to not break any structure? If we have a dip, have a rally, have a dip, have a rally, and this starts to form what I think could be a rising wedge. There's two ways I see this rising wedge playing out. A typical rising wedge is we break the structure and we fall back down into where we started. Okay. But the other side of this rising wedge is the market breaks out and we have a capitulation move. And right now, I'm almost thinking as we have this runway, we have this Goldilocks scenario. The market seems to be pretty optimistic and excited about everything right now, that we might just continue to push higher, man. And this might be a market where it's like, what a crazy run that was, what a crazy recovery that was. And then reality's later, 2025,
Yeah.
Just thinking.
Yeah. I mean, it really could. And that's the thing is, Chris, I'll give you my take on it too, is the overall picture of the economy starting to slow. I've made this point many times of, the Fed has not a great track record of getting it wrong or getting it right, but markets can go parabolic a lot longer than the full story takes to play out. Or a lot longer than people think before the full story plays out. And so I am very much thinking that, we may continue to see, as you mentioned, some seasonality looks really good here. You're talking about coming into May, June, July, August, all 4 of those months. There's a nice little seasonality play here that you could take advantage of if you are bullish. I'm not saying you go out and you buy as soon as it hits the highs, but I'm saying, if you see pullbacks on some of these names, I mean, I'm exposed long. I did something similar to you, Chris. You mentioned maybe capping your upside a little bit too soon. I think I heard you say it that way. I definitely did that. I sold calls against my VOO position at 480. So I missed the CPI move on my S&P. So not great. That expires today. I'm considering rolling it. That's big fancy moves for me because I don't know all that about much about options, but I didn't think we'd get the V up, so I was wrong, but still made money. That's why I love options for that reason.
Sure.
I had a position. I said, let me slightly hedge by selling calls against my position at 480. Market has gone a little further than I thought, but with if there's a pullback today, I might take a chance to just roll that further out on the call side, and then I can just stay into the S&P because I think I find myself, Chris, like. I was listening to CNBC this morning, and one of the gentlemen that manages a bunch of money, they all do, but they were pointing out that, basically a prudent, money manager has to still be a little worried here. Always finding a reason to be worried. That's what you get paid to do if you're managing money, is to worry and, do so, find risk that makes sense to take. But he pointed out that, some reasonable, when you see these new highs and a lot of the good news is kind of behind us, right? Inflation come down story. Okay, that's behind us. A great earnings season. Well, that's just finished up. Yes, you've got NVIDIA, but outside of that,
that's a big one. Going to say, but what outside of that, I mean, that NVIDIA is going to be a major play next week. I mean, last year, August, NVIDIA was single-handedly dumped in with Jackson Hole, and it was like one of the most volatile weeks I've traded in a long time. And nothing happened other than it was like a $15. Let me see if I can go back to I remember this because it was a freaking wild week. I also want to show, so I know you and Kenzo talked about gold. I'm loving some silver right now, and I'm loving a little bit of everything.
Are.
So,
dude,
silver, I know I told you. Yeah, silver is, so I'm pulling in some credit spread trades today, which should expire for full profit. They'll be out of the money for full positions. And then my SLV position, let me go to all accounts right here. Let's go positions. SLV currently sitting up around $29,000. My Philip Morris is up around $38,000. Like, those are my big runners. I'm letting them go. I've got diagonal spreads. I'm going to reload for another 30, 45 day cycles to kind of lower the cost basis. I closed out JD for a diagonal spread. I was in for like a $6 debit, closed it out for like a $13 credit yesterday. That's a China play on retail. I still have some Baidu, some Baba, but let me go back to this story on, let's go to the SPY August of last year. And let me see if I can kind of relive this for a moment and not have any nightmares. So let's go. This was all around Jackson Hole. This was August of last year, and it doesn't look like much on the daily time frame, but let me find it here. I'm pretty sure this is where we at. August of last year. there's got to be like one weekly candle that stands out, because I just remember a super volatile week, and it just, at the end of the day, like nothing happened, but man, it was a wild couple of days. Where's my August? Here we go. So I believe it was in here. You're getting the run up somewhere in here. It's like the Jackson Hole move was either this high to low that kind of created the top to start selling us down, or even the fuel that like followed us through. But I mean, it's funny. I look at this and it's like living through that. And just like you can recall, you know, all these crazy events that you've traded through over your career, you know, it doesn't look like much in the chart right now. I'm making like a you know, mountain out of a molehill, when the reality was, if I just traded with less risk, it wouldn't have been a problem. That was the problem. I was just too heavy in a couple positions and ended up getting assigned, and I had to cut some losses and then, you know, hedge my way out of it. So it was just more work than it needed to be. Different story. But anyway, my point is, earnings on NVIDIA will be a market mover. This year, Nick, earnings on NVIDIA was the reason that we had this gap in the first place. This was all NVIDIA right here, right?
Yep.
So I just think it's going to be the same situation where the market's going to look to NVIDIA as maybe the market can continue to plug away higher. It's going to be a big hit or miss for earnings. And here we are sitting at, you know, at all-time highs or near all-time highs in NVIDIA. If this is a disappointing post or a disappointing earnings announcement for NVIDIA, I could see a gap here. I could see it coming right back down, and I could see a broader market drag lower just in the near term. We have this NVIDIA gap that still may fill, but you know, at the same time, I talk about filling a gap, but it also might break to all-time highs, and NVIDIA can do no wrong. You know, so that's what earnings gives us, and we'll see how excited the market gets.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.